For today, it's basically reviewing again what we've already done. So we'll do some chapter 10 problems, we'll do some chapter 14 problems for our cash flow statements. Our schedule, where we're sitting, is we're in good shape, I guess you could say. May 6th are when the assignments are due. The adaptive studies I did push out to May 8th, with our exam is also on May 8th, which is a week from today. So our last two class periods, not going to be full class periods, so you will have plenty of time to work on your assignments if you are not quite ready yet. So today we're probably looking at, I don't know how long these problems will take us, probably half the class period at most. And then Monday, the same thing, just to kind of get us refreshed for our exam on Wednesday. I could push it to Monday, the exam already, but no, I'm not going to do that. I'm going to just keep it where it is. I'd rather have us, well prepared than trying to push it on to Monday, since we're already a week ahead. So it doesn't pay to move that test date. So,
Test on Monday anyway.
pardon?
We have a test
Oh, that's
on
right, you have a
Monday.
test
Yep.
on Monday. That would
We don't
be
want
bad.
to.
That would be really bad.
That would be exhausting.
That would be bad. So, I know you guys could do it though, but
Oh, we could do it, but it.
no,
Do
it
we
doesn't
want
pay.
to, though?
No,
My
no, you
hand would
don't.
hurt.
So think about that too. If you didn't want to come in on Monday early, we start at 9:30. You may want to just decide to collaborate on Monday and then come to your exam later that morning. So keep that in mind as well. All right, so for today then, we'll start with our first problem in chapter 10. I like this one because it's very similar to your 25-point project problem. Remember, that one's the TSA one, so we got to do well on it. So this is almost a mirror image of that. So if you can, pull out another variable and fixed overhead variance template. Here again, I'm going to stop my recording. I'd like you to get started on the template. I really would like to see you finish or do most of this template. And then we'll work from there as we go through our discussion. So go ahead and start the problem. We'll come back shortly. All right, so I filled in a little bit of the problem numbers. Actual variable overhead, actual fixed overhead. And then I also put in the actual hours at 592,300. Let's look at our rates, our standard variable overhead rate and our fixed overhead rate. So I have on the left side here the computation, and I've made a note here as to what numbers we have to find to get those rates. We have to look for a budgeted dollar amount and a budgeted labor hours amount. What was the variable overhead budget that the company established? Yeah, the 1,440,000, right? So that is our top number.
Oh, you're looking for SVR, sorry.
Yes,
I was thinking of the
variable.
bottom one.
Yep, variable. Good. And what's the budgeted labor hours amount?
600,000.
Excellent. Excellent. How come not the 120?
Because there's 5 direct labor hours.
Right. And the 120 is what? The 120 is units,
Yeah,
and we
units.
need to convert that to hours. So that's the main thing that you also have to do on your 25-point problem, is convert that unit into a budgeted hour amount. So how much do we get?
2.4.
2.4?
Yep.
For those at home, how does that look? That SVOR. standard variable rate. Is that okay with everybody at home? Okay, thanks, Sam. Awesome. Sure. Jade, the 600,000, they don't give that in the book. This 600,000 is actually the budgeted units. They plan to make 120,000 units, and the standard hours to make one unit is 5. So that's where the 600,000 comes from. Using units and converting it to hours. Remember, we have to do that conversion because our templates are based on labor hours. So you'll see the actual hours here. And the applied is based on hours as well. So we have to convert it. Is that all right then, Jade? Okay, awesome. All right. Diane, what is my middle box number then here, where the budgeted times the actual is located?
1,421,520.
Excellent. And Teresa, what's my spending variance then?
Oh,
It's all right.
1,280.
And which direction?
Unfavorable.
Are you sure?
Oh, sorry, favorable. I'm writing and looking at the same time. It is on, yeah, it is unfavorable.
I was just checking. Good job. You didn't sound too confident, that's why.
Oh, because I was writing at the same time.
Good job. Excellent. Unfavorable. Again, please be careful with that on the exam. That direction, there'll be an A answer and a B answer. The amount is easy. It's getting that direction correct. All right. So then, Liz, come on, you can do this. What is the allowed hours here? What's my SH?
I don't know.
Are you punting?
Yeah, I went to someone else.
Okay.
That was fine.
Kershaw, how do I get SH?
Actual units times standard hour.
Yeah, what's our actual units that we made?
118,600.
Good.
And then 5.
And then 5 was what we think it should take to make one unit, the
Yeah.
standard, right? So this is the author calls it the allowed hours, right? That's what it should take us to make. And what is that amount, Kershaw?
593,000.
So was this company efficient with their resources? Was my efficiency variance favorable or unfavorable? Favorable, right? Looking at the hours, what we actually have for hours is less than, right? 592 is less than the 593. So efficient use of our hours, where we spent probably a little more money on the left side here. Kershaw, what is this amount then on box 3?
$1,423,200.
And Tom, what's my variance amount then?
1,680.
And Tom, what's my total?
1,480.
Excellent. Okay. All right. So if the question is on the test, what is my predetermined variable overhead rate? And you tell me what? $2.40. If I asked on the test, how much is put into work in process inventory? What dollar amount do I put into work in process inventory? Yes. So when you see the word applied, what's it applied to? The WIP inventory. So this amount, this this 1,423,000 is going into work in process. You need to know that, right? So I'm going to debit work in process inventory for 1,423,2. I'm going to credit manufacturing overhead control. So I'm debiting in this account, right? Debiting makes it go up, right? I'm increasing, I'm putting it in production. All right. Let's go to the fixed overhead. Ruby, do you have the fixed overhead rate? Come over here. Do you have that amount? $360. Awesome. How did you get that $360? I know it's a lot to write. What's my budgeted dollar amount, Ruby? $2,160,000. Does everybody see where that number is coming from? Given to us, that's our budget amount. Excellent. And then obviously the hours are the same, right, as before. So we had a budget amount of $2,160,000. We can use the same hours budgeted for the bottom number. The key word is, guys, budget, right? That gives us our predetermined overhead rate, which is our SFOR rate. We again can use, Kershaw, what do we have for hours? 593? For our allowed hours, same as with our variable. Austin, what's the middle number? What's this budgeted fixed overhead number? What's in here? Not sure? Okay, that's fine. Diane, what do we use for that middle number?
2,160,000.
Yeah. This budget number and this are the same thing. I almost tipped over there. Did you see that? Okay? That's our middle number. Budgeted overhead. And it's got it in the title too. So try to use the headings on our templates to help us fill in the template. And let's see, I'm looking at, is this 9,600 for our spending?
Yes.
Which direction, Austin? Favorable or unfavorable? Did I spend more or did I spend less than our budget?
Less.
Less, so then it's what? That's a really good thing.
Yeah, that's good.
So that's
Favorable.
hashtag favorable there. Yeah, definitely. Cool. If my actual spending is less, that's good, right? It's just like golf, the low score is the winner.
Better.
Not like bowling.
Way
Bowling,
better.
the
The
high
high
score is the
score.
winner, right? Okay, good. Yee, what's my amount here, my applied fixed overhead?
2,134,800.
Excellent. All right, and Liz, what's my volume variance?
25,200.
In which direction, Liz?
Unbearable.
How come?
Because supply fixed overhead is lower than budget fixed overhead.
Yeah, Yes, this is greater than this, correct? That's true. But what's another reason I'd really like to hear rather than that? That's a good reason. I'm not saying it's not good. But what's volume mean?
Capacity.
Capacity, units, right? So how many units did I plan to make? What was the plan?
2,160,000.
120.
For 120, yeah, in units. I want to look at units. So the plan was to make, I call it plan. The budget was to make 120,000 units. What did I actually make?
118,600.
118,600. There's nothing that's worse than that, right? If we're not making our units, because then my cost per unit is creeping up, and we don't want that. So that's what makes it unfavorable. That's a big problem. In total, our variance is unfavorable. How much, Steve?
15,600.
15,600. All right. So we have a problem here on this volume variance. You're the production manager. How do you fix that problem?
Fire the bad apple.
Yeah. Yeah, I'm gonna look at why production not met, right? What's one cause that production is not meeting its goal? What's one cause? I think you mentioned it, right? Training. And specifically those people on, because most production now is machine oriented, right? That machine operator is critical to your success. There's no other way around it. What do employees tend to do? Do they like to ramp up their machine and let it just fly?
No.
No. How come?
You gotta work harder.
You gotta work harder. The machine's really gotta be in tune, right? If I run it a little slower, I can get away with a lot more, right? So that is a constant issue. I see it at our client's place. They run the machine at 80% of its actual speed that it should be running. Because it works, right? It's safe, and I can get that. But then that's the problem here. What's another issue?
Power outage maybe?
Yeah, you can have power for supply shortages, right?
Yeah.
Maybe the material's sitting on the dock and there's nobody to receive it. Something that simple. And it's sitting there and you can't get to it because you got to first receive it. That type of waiting, that bottleneck, or right? Quality issues. So we had to stop our machine, we had to do maintenance on it, we had to do something to fix the quality issue that we're encountering. So this list could be hundreds of items that could make up that problem. But as a production manager, unless I know it's a problem, right? That's what these templates are for. Unless I know it, I can't fix it. So that's the goal here when you set up those budgets. Another issue we always have to be concerned about, what are budgets? All they are is estimates. Are estimates always 100% accurate?
No.
No. So even though you go to the production manager and say, what's going on, why are you not meeting the goals? Maybe the goal is set too high, right? So we always got to be careful with that. All right, just something to think about as we go through our our templates here. Uh, in this case, I'm just trying to think of other ways I can show this. Hopefully, again, please use this template for your 25-point problem. It's almost a mirror image of it. So use this guide to help you complete that. Remember, this is the TSA one. It's our last one, guys, so I don't want to miss this one. All right. The last one I'm going to do today is on chapter 10, is problem 73.
Can I have another template?
Yes.
Do you want to just have you more than me?
Oh my gosh, yes. All right. So let's take a break. Okay. I think the next easiest number to get is our SH, standard hours. We got the actual units. What am I multiplying by?
1.6.
The 1.6 hours, right? That's what we think it will take to make one. Is that 80,000?
Yeah.
So we can put that here. And down here. Sam, can you tell me what the standard variable overhead rate is? I'm looking for this number, Sam. Do you know what that number is? Standard variable overhead rate. Okay. It's actually given to us, Sam. In the problem itself. Ruby? Yeah, yes, you got it right, Sam. It is 10. Very good. Excellent. Good job. It's 10. Everybody see that in the template? Yep, that was given to us. How come it's not the 16? Why is it not the 16? What is the 16? That's the per unit number, right? So that's what we don't use. We do need the per unit number to come up with our selling price, right? But that's all it's for, is to come up with our selling price. So we might as well finish this out, 40 and 20. Jade, what direction are the 40 and 20? Favorable or unfavorable? It's hard to tell if they're there. Yeah, unfavorable. Excellent. Excellent. So, both unfavorable direction. So, this company's in trouble, right? Or our budget numbers are way off. I wouldn't think they'd be off this much. Or shouldn't be anyway. So we're not only spending more than we should, right? We're also inefficient at what we're doing. So maybe a lot of rework is happening here, a lot of waste. Something's going on that's creating this huge number. Now I did have an SVOR, which we didn't have to compute because we already were given it $10, right? What's my fixed overhead rate? Teresa, what's my fixed overhead rate?
SBO or SFR?
Yes, standard fixed overhead. Yep,
$6.
$6. Okay. Awesome. It's 480. 480,000. Good. Okay. Yeah, Austin.
How did you get the 6?
If you look in our template and our problem, it's in that chart.
So it's the FOH?
The FOH. Mhm.
Okay.
Yep. FOH is fixed overhead. Yep. And that it's they call it a standard cost card. So we did materials and labor last chapter. So now they're just adding the variable and fixed overhead in that chart. And that's the standard cost sheet. That's our budget numbers. So it's a little different look than what we did last time on our last problem. That's why I want to show it both ways. Here's what I want you to know though. Also, if this is 6, how do we get that budget number? What's the bottom number? What's this bottom number?
9,600.
9,600?
96,000, sorry.
96,000 hours. How'd you get the 96, Tom?
The 1.6 hours time the practical activity.
Yes, you see that word, practical activity. This is another word for a budget. Budgeted units is practical activity, and that was 60,000. And I'm multiplying it by the 1.6 hours we think it should take to make one. Does everybody see where I'm getting the 60, why we're using it? 60,000 units were practical activity. That's what we think we can make, is 60,000 units. So I'm converting the units, this is a budget number, to hours by multiplying by the 1.6. And Tom's exactly right. Our budgeted hours for this period is our bottom number. Again, different look than what we were told last time. Last time we had to figure out the rate. This time the rate was given to us, and we had to figure out the budget number, which is 576,000. So all I'm doing is I'm multiplying the $6 times 96,000. This number is that number. Now we have everything filled in. So we have a 20,000 spending variance. Which direction?
Favorable.
Favorable. We have a huge volume variance, unfavorable. I planned to make 60,000 units. That was the plan. That was the budget. I only made 50,000 units. That's a big difference. So that's why we got this capacity volume variance of $96,000.
Yeah.
Mhm.
Quite a big difference.
And 76 total unfavorable. Yeah, you're looking at 15%, right? 10% would be 6,000, about 15% below production level. So yeah, huge problem here. What do you think, guys? Is that all right? Austin, what do you think?
Yeah.
You okay? Yep. Guys at home, Catherine, I see you joined us. How are you doing out there? Jade, you're all right? Thank you. Oh, okay. Could be because of the weather too, Catherine. Do the best you can with it. All right. I'm going to take a break here. Let's take a break here and we'll switch gears and go to chapter 14 when we come back. All right, for chapter 14, we did touch on it last, was it Monday? Yes, Monday. And let's go back to it. We're doing the indirect method. I just wanted to point out one thing. It talks about the cash flow, the indirect method on page 794. We have to also disclose non-cash exchanges on our cash flow statement. They give us an example here. We're looking at our non-current entry. So what's an example? I exchange land for common stock. So even though it has no effect, there's no cash exchanged, we still need to record this. It's a GAAP requirement on our cash flow statement as a supplementary schedule. So you probably learned that in intermediate, I'm assuming? Yes? Yes?
Actually, we're going through it now.
You're going through it now? Okay, good. So you should be talking about those non-cash exchanges on this statement as well. I also wanted to point out there is a checkpoint on 794. Question number 1, why is the cash flow statement important to have? And it talks about in that checkpoint, question 1, the answer, it's really used to determine how much cash our operations are generating. And that's huge for whether I give them an investment dollar or the bank is looking for that cash from operations to help them determine whether they give the loan or not. So it talks about how important this statement is, not only to yourself, but also to others. So if you get a chance, please review that as well. All right, so the problem I want to start with here, because cash flow is really about practice, is problem 37. So if we could use our cash flow template on page 823. Yeah, 37. It's what we're required to do is prepare the net cash from investing activities section. So we're only looking at the middle, right? The middle part of our template. Cash flow from investing activities here. So for letter A, I'll just do the first one. Purchase $300,000 of a 10-year bond issued by McKinsey. And we are the Craig Company. So we actually purchased what's the name of the company again? McKinsey. Stock as an investment.
Wouldn't that just be bond?
Would we bond?
Or, yeah, sorry. Oops. So it's a bond investment. So McKinsey issued a bond, we bought that corporate bond, right? 300,000?
Yes.
So I always put my outflow as a negative symbol. How about B? Do we put that here, that exchange, that non-cash exchange? We actually don't. Where does it go on our cash flow? It's a supplemental. Well, that they have here on the bottom of this template. So you can see your schedule of non-cash investing. So we would just note, make a note here, exchanged because it has no effect on cash, right? Exchanged land for stock in the amount of $105,000. So that would just be a supplemental note added to our cash flow statement.
Do we change it from machinery or for stuff?
Machine should be.
Oh,
Exchange machine for land actually.
guys, I should read the problem, shouldn't I?
Yeah. It's exchange machine for land. It's actually the opposite. Reverse.
We acquired land
In exchange for
in
machinery.
exchange for machinery.
Yeah.
Good thing I got an eraser.
You weren't there before, you are now.
Is that written okay now?
Yes.
We were just talking about reading, right? I should probably read.
Yeah.
Wow, such a tough one. All right, let's try C. Maybe I'll just have you guys do it. What do I do here? Sold equipment for, that originally cost $810 for $495,000. Accumulated depreciation taken on the equipment to the point of sale was $270. All right, so what do I put in my investment section? What amount?
The whole amount, the 800.
Not the 800.
$495.
Yeah, the 495. So sold equipment. It was equipment, right?
Yeah.
495. So that's a positive. So I'm going to add to my cash in the investing section, 495. So that's a plus. Now, where does the gain go?
Adjustments for non-cash.
Yeah, our adjustments for non-cash, Diane. So even though we're not required, let's do that. Gain on sale of equipment. This is good practice. How do we figure out the gain? Because you're going to have to do that. We sold it for $4.95, right?
Mhm.
I'm just going to put it here. I'm assuming it's a gain. I don't even know if it's a gain. What do I subtract to figure out the gain? Kind of.
Original cost minus
Yeah.
depreciation.
Cost minus depreciation. Our cost was what?
810,000.
810 minus
270.
270 equals
4,000, or, yeah, 540,000.
540?
Yeah.
What do we call the 540?
Book value.
Book value. Job. Yes. So it's not a gain, is it? It's a loss. So I have a loss here. So I assumed we had a gain. So I gotta do another erase thing. Loss on sale. $45,000? So on my cash flow statement, if I have a loss, do I add the loss or do I subtract the loss from net income?
Yeah.
You have to add it in. And remember, guys, the indirect or method, we have net income here up on top. The loss reduces my net income, so I gotta add it back. Correct?
Correct.
So that it reflects my cash flow at that point then. I'm trying to convert my net income to a cash income, if that makes sense. So losses are added, gains would be what? Subtracted then, right? So watch for that. That's a very easy test question. Gains are subtracted, losses are added. Here too, this 495 is the cash that we're getting, right? We don't use the 810. The next one, purchased new machinery. Forgot the amount again.
180,000.
180. And then at the end, we did what? Purchased common stock in Lemons Company for $82,500. As an investment. Again, negative. So what is the net then of all four transactions? What's my net cash flow used provided for investing activities? I think I spent more than I got. did I use up? 15, 20? Really? That much? 67.5? Well, not doing something right there. 67.5. To get in the investing in section, these have to be what? Long-term assets. There's no current here at all. So it has to be long-term assets that we're looking at here in our investing section. All right, so we had a loss. We had some investments. Any questions on this section? Guys at home, you cool with this? We lost Catherine. Great. Sam, you're good? All right. Thanks, Sam. Okay, let's look at another problem here. .44 is our next one. Here's a full-blown one. 2 balance sheets, one 2001 to 2002, and we want to prepare, and we also have to prepare or look at the previous page. Not sure why. Let's try it. Prepare a cash flow using the indirect method. Problem 44. So we'll start with our net income. Adjustments to reconcile net income. What am I looking for here?
Did you see anything?
I'm looking for depreciation. We didn't sell or buy, we didn't sell anything, no, that's true.
You should know it.
Depreciation, another possibility. Amortization expense. These are some things that we might have to add back, right? These are pluses to our net income. What do I amortize? This is an intermediate question. What type of asset do I amortize? What's one?
Intangible.
Intangibles, which are what, Tom? Pardon, Teresa?
Patents,
Patents is one.
goodwill.
Goodwill,
Copyright.
copyright. Yep, those are your intangibles. Very good. Excellent. I'll tell Judy that you did really well. How can I get the depreciation though? I can't with this balance sheet. What am I looking at?
Accumulated
Yes.
depreciation.
You can figure it out from the accumulated depreciation account. How much did it increase by?
9,000.
The 9. So that's our depreciation. That's our expense for the period. Now we can do that pretty easily just by we didn't have any sales.
Mhm.
If we had sales, that would complicate that increase tremendously. So we're fortunate that we don't have sales here. Okay. Changes in current assets, current liabilities is next. We're starting with accounts receivable. I think the next one's inventory.
Yeah.
Is there any other current asset left? Nope, I think that's it. How about on the current liability side?
Just accounts payable.
Just accounts payable. Under the indirect method, this section only deals with the current assets and current liabilities. So receivables looks like it went down. Inventories went up. Accounts payable went down. Okay, so 27,000. Oh, it just happened to be the same. Inventories 27 also.
Yeah.
Am I right on this?
Mm-hmm.
It just kind of freaks me out when they're the same number. And what's the accounts payable going down? How much? 39.6. Okay, Jade. If I decrease accounts receivable, does that add to my cash or does that subtract from my cash? So do I put a plus or a minus here? If I decrease accounts receivable. Excellent. That's a plus. Jade's right. Everybody agree? I said so. That's true, right? I'm getting cash because my receivables are coming down. I'm getting that money, right? So if my receivables are decreasing, then that's a plus, and my inventories are increasing, what must that be then? Going down. That's a use of cash, basically. I'm increasing my inventory, so I must be spending some money. And if I'm decreasing my payables, it's going to make my cash go down, right? I'm paying my vendors, it's going down at that point. So now we have all the items we need to figure out our first subtotal. So
Pretty easy one.
I'm adding the 9 to the 63. I'm adding the 27, subtracting, and then subtracting. What do I get here? 32,400. Positive, right?
Yep.
So that's a good sign. Even though my net income shows 63,000, cash flow wise I only got 32. So that's a little concerning. But look at what we spent. We spent a lot of money on our payables and inventory in this period of time. That's where a lot of our money went. So there is some logic to why it's going down. On the equipment, it says no equipment was purchased or retired. How boring. So I have nothing here, I think, right? My property, plant, and equipment remained at 180. So on other problems, there is going to be a change in the property, plant, and equipment, and that's what would show up here. My purchases and sales would be recorded here. Purchase and sales are recorded of long-term assets are recorded here. So that's going to be 0. Finance section. Issue or retire bonds. Sometimes these are called mortgages, right? But the key is they have to be long-term, right? Has to be long-term in this section. But what's one thing that does go in here?
Payment of dividends.
Yeah. Teresa, how much was our paid dividends?
17,100.
That's making our cash go down, right? What if we declared a dividend, Teresa? Would we show it here?
Where?
Declared it. Remember with intermediate, you declare a dividend, right? And whoever has stock at that time gets the dividend. And then you pay it later. So if I declare it, it would not be recorded here, but where would it be recorded? In the
That's
non-cash,
Oh,
the non-cash stuff.
oh.
There's a difference between paid and declared. All right. So I got a 17.1 negative here. So my net change, then I went up 32.4, came down 17.1. What's my net change then? A positive.
14,300.
So we're going to compare our beginning and ending cash. Hopefully we come up with the same. So we had 81. Oh, we're not coming up with the same. $81.5 is what we started with. Oh, excuse me, 49.5. What did we forget, or what did I forget? I should end up with what?
31,400.
Is there common stock we didn't account for?
We issued common stock? Oh, look at that.
Oh, man.
That's the beauty of this statement. I can reconcile, right? Good job, Diane. How much common stock did we issue?
16,200.
That would do it. That's what we're missing. So, I'm doing a lot of racing today. My net effect here is still a negative, but it's what, negative 900? Good job. Excellent. That is it for that problem. All right. So I'm going to stop here, and what do we have scheduled? I got 2 more cash flows on Monday, and at least 1 overhead on Monday, and that's probably going to take us about an hour, hour and a half or so, and that will be it. The rest of the class on Monday will be yours to study for whatever, intermediate or finish your assignments here or there. Are there any other questions that anybody has at this point? Okay, anybody at home have questions? Silence. Okay, great, thank you guys. Awesome, Jade. You guys have a good weekend then. Stay dry.